But first, our top story. The impact of the Ukraine crisis on Russia's economy is starting to show. One banking group is already predicting a recession. Now, Russia's prime minister says he thinks the country either grew very little or not at all in the second quarter. Tom Barton has more from Moscow.
In the short term, Russia's economic growth would virtually stagnate, said Prime Minister Medvedev. For the year, the conservative estimate by the Ministry of Economic Development has economic growth at 0.5%. Europe's Bank for Reconstruction and Development predicts Russia will slip into recession, and the average regional growth rate will grind to a halt from 2014 to 15. Much of this has been put down to the ongoing crisis over Ukraine and resultant sanctions. Both the EU and the US have now targeted individuals and companies in Russia and Crimea with asset freezes and visa bans, which have intensified capital flight, already running higher so far this year than in all of 2013. There is much uncertainty over the effect of these and possible future sanctions, says Nikolai Grachov from the Skolkovo Foundation.
In different fields, surely the results of sanctions could be different. Surely in some fields it might boost some domestic production, but maybe in some fields it would just, where international cooperation is quite important, it would have some negative impact.
For 2015, Russia's Economic Development Ministry puts the conservative GDP growth rate at 2 to 2.4%. An energy dispute also threatens Russia's economy in the longer term. Russian President Vladimir Putin says gas supplies to Ukraine will be switched off in June if payments aren't made. State oil giant Gazprom says the total debt amounts to $3.5 billion, which Ukraine disputes. The EU, currently Moscow's biggest customer, is looking to diversify its gas supply away from Russia, while Russia is looking to seal a deal with China to diversify its energy exports. Tom Barton, CCTV, Moscow.